inspiring and how different it was from how Billy's day might normally have been. It's a very, very powerful piece that he wrote.
Brett, we're running out of time. Got 30 seconds. I mean, you've got Goldman's 13 anonymous junior investment bankers. We've got Matt Stone and Trey Parker. Is there one thing that you got like a million people saying, yeah, you got to have this? I'm thinking it might be meme stock, but I'm just curious, and just got about 20, 25 seconds.
Oh God, Carol, you're putting me on the spot here. But there are so many people that we sort of feel compelled to do it. One of the ones I love is I'm glad we got David Zaslav on.
Yeah.
I'm glad we got Jason Sudeikis on the list this year.
I believe that's Ted Lasso.
Who doesn't love Ted Lasso, right? And they won seven Emmys in September.
It's a list that's just so much fun to go through, and I'm so glad we got some time with you. Really well done again. Brett Began, he is features editor at Bloomberg Business Week. Jill Weber, editor of Bloomberg Business Week magazine. Check it out. It's online and it's in the magazine. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, December 1st. An extremely volatile session, choppy day. The Dow, the S&P swinging between gains and losses, right to the numbers because we've got NASDAQ lower now by 32 points, down 0.2%. S&P up 16, up by 0.4%. And the Dow Jones Industrial Average, which had been up 520 points, up 1.5%, is now up 13 points, up by less than 0.1%. 10 years up 3/30 seconds, 10-year yield 1.43%. Stocks are being whipsawed as traders assess the latest developments on the global spread of the Omicron coronavirus strain, with the U.S. confirming its first case in California. Health health officials in San Francisco say that case is in that city. Gold is up 0.4%, $17.81 the ounce. West Texas Intermediate crude up 0.9%, $65.58 a barrel. It could cost as little as $50 billion to save the global economy. That's according to OECD Chief Economist Laurence Boone, who says that's the amount needed to vaccinate the world, a measure that's key to ending the pandemic and tackling the imbalances plaguing the recovery. Boone spoke this morning with Bloomberg Television and Radio.
What's happening now is just a reminder that we need to find this 50 billion, that will help us end all these imbalances and the stress that the virus is creating on the global economy.
After earnings, shares of Salesforce.com are down by 10.5%. Also reporting earnings last night, Hewlett-Packard Enterprise, its shares down now by just about 0.1%. Among the companies reporting after the bell today, Snowflake Inc., CrowdStrike Holdings, and Splunk. Recapping stocks mixed, S&P higher by 13, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everyone. This is Bloomberg Business Week. Carol Masser, along with Tim Stenovic in our Interactive Broker studio. I love going to our Most Read because it really gives us an indication of what folks in the financial community, what's of interest. And we are now seeing increasingly, I remember this in the early days of the pandemic, you look at the top 10 stories, and so many of them would be about COVID. And certainly as we move towards a vaccine, it would be about a vaccine. And we're once again seeing, I'm trying to think, 1, 2, 3, 4, 5 stories. So half the stories of the top 10 most read stories on the Bloomberg, half of them have to do with COVID and specifically Omicron.
I think what's particularly surprising about what we heard from Dr. Fauci, or what we heard earlier today, was that this didn't happen sooner in the United States, given that we know how variants spread and we know how quickly this has spread, as Bob Langreth told us earlier today. That said, Carol, I'm a little bit surprised, to be honest, with the market reaction to this, given that it was sort of a known that we would discover this variant in the United States.
Well, you know how we talk about like a crisis happens and memories are short, and so people sometimes create the same mistakes, certainly within the financial markets, like we forget about things. I think it's safe to say we're still obviously in this health pandemic, and still seeing people get sick. We're still seeing people die globally, but it's still fresh. I mean, you and I talk about it when we see a headline or something, and it's like, you know, we're feeling the stress of it. We remember the lockdown, and I think it's safe to say that investors remember that lockdown and how quickly the economy went from ramping up, right, to shutting down overnight and did a 180. And I think that's why you see fairly swift reactions in the market.
Yes, but we did hear from President Biden earlier this week, basically saying that that type of reaction is off the table. And at the same time, I do think we have become accustomed to living life in an environment where there's a pandemic raging.
But what does it mean for a CEO? Do they say, oh, we were just about to spend on X, or we were just about to hire, you know, this amount of employees? Maybe we'll just hold off for a minute.
We were just about to tell you to come into work starting in January, 3 days a week.
And now we're not.
And now we're not.
Supply chains, right? Maybe starting to, we've had the stories that they were starting to ease. We've talked about this in the semi-sector, that things are starting to ease. And then all of a sudden you wonder, okay, wait a minute. Do we now take several steps backward? And that's hence the volatility increasing in the markets. Not to say that, too, that we've seen record after record, right? We talked about how many records we've seen in the S&P 500 this year. And you get to a point that, you know, are we as investors not pricing in risks adequately? And so then do we need to do a recalibration of where financial market assets are?
I think it also raises a more existential question about what life looks like on the other side, or if we even get to the other side of this. It is shocking to think that we are entering year 3 of this, and soon we will, you know, officially in the United States be in year 3. And what that looks like for our families, what it looks like for school, what it looks like for being able to spend time with each other.
And nobody likes uncertainty, and that's what happens when you do something like this. And I think it is really smart when leaders come out, whether it's political leaders, whether it's medical leaders come out, when it's CEO leaders. And we saw this so much during the pandemic. Initially, it was safe to say that leaders were afraid to talk about things. Same thing with George Floyd. Like, people were afraid to come out. And then eventually, as one leader did, another leader came out and talked about these situations, the impact of the pandemic on their businesses, on their employees. It gave us some information, gave us specifics, gave us something to think about, and maybe, ultimately started to lay the way for our way out of it or how we manage it. Look at this story, Matt Bosler, great story about companies, how profitable they have been, margin increases. So we are figuring this out and figuring out how to make our way through it.
And what does it mean for the American worker, too? What does it mean for...
Still figuring that out, I think.
Exactly.
Right?
Yeah, we are. We're figuring out where people are figuring out where they want to live, the type of companies they want to work for, and if they actually want to be in an office.
And
Great resignation.
Exactly. In the meantime, we did have the Beige Book come out. This is anecdotal information to about the midpoint of the month of November. Federal Reserve saying the economic activity grew at a modest, moderate pace, growth constrained by supply chain issues, labor shortages. These are not new points. We know this. Prices rose at a moderate to robust pace. Nearly all districts reported robust wage growth. Input cost increases were widespread across industries. So these are stories that we have certainly been detailing here at Bloomberg. As for the equity markets right now, let me just rehash that we are at our lows of the session. We've taken another leg down in about the last 15 or 20 minutes. What does that mean? The S&P 500 now just showing a gain of about 4 points. The Dow is now off about 49 points, and the NASDAQ down about 87 points. For much of the day, we have been in positive territory, although we are definitely been bouncing around here.
Carol, that means you're going to have to redo your gainers, I bet.
I am fearful. But I mean, the S&P 500 at its highs was up 2% today. So now, as we mentioned, we're now just up about 0.1%. The Dow Jones Industrial Average, let's pull it up in terms of highs and lows today. We saw the index up as much as 520 points for a gain of 1.5%. We're now down about 0.1%. And if I take a look at the NASDAQ 100, so looking at really those big cap names in the NASDAQ in particular, we see the NASDAQ 100 at its highs up 1.8%. We're now down about almost 0.3%.
And look,
that's quite a gap.
It is quite a gap, but let's put that into perspective. Here we are in the last month of the year. We almost wrapped up every trading day of the year. Year to date, the S&P 500 is still above 21%. The NASDAQ is higher by close to 20%, and the Dow, the real laggard there, just about 12% higher.
So this goes back to, and I know I've been saying this a lot, I've been using the word #recalibration, but because if things are going to be a little bit different, if we are going to have to deal with a variant that might cause us to pull back on economic reopenings, we've seen a lot of countries, putting in travel restrictions. We are expected to hear from President Biden on this, I believe, tomorrow. So if we start to have to shut down things a little bit or hold back, if people aren't going to go out shopping or traveling, what does that mean for economic growth? And then do we need to recalibrate our expectations about earnings growth, revenue growth potentially, especially some of those hard hits, sectors like hospitality that really took it on the chin because of the pandemic.
What does it mean for monetary and fiscal policy as well?
Right.
And what arrows are left in the quiver?
Which is interesting that we've had Omicron out there, but we've seen Jay Powell come out and say maybe it's time to stop using transitory. Maybe we're going to be faster about cutting back on those asset purchases. This is why. Lots of questions, everyone. All right, let's get to world and national news. Over to Nancy Lyons. She's in D.C. Take it away, Nance.
Thanks, Carol. The Omicron variant of the coronavirus has made it to the U.S. That's the word from the nation's top infectious disease expert, Dr. Anthony Fauci, who says the patient is in California.
The individual was a traveler who returned from South Africa on November the 22nd and tested positive on November the 29th.
Fauci says that individual is self-quarantining and had been vaccinated. A half century after Roe versus Wade and 30 years after the Supreme Court reconfirmed the right to abortion in Planned Parenthood versus Casey, the state of Mississippi today asked the U.S. Supreme Court to overturn the right.
Mississippi Solicitor General Scott Stewart assailed the two prior decisions.
They have no basis in the Constitution. They have no home in our history or traditions. They've damaged the democratic process. They poison the law.
Justice Sonia Sotomayor quoted Mississippi officials who admitted acting now because there are new justices on the Supreme Court.
Will this institution survive the stench that this creates? In the public perception, the Constitution and its reading are just political acts.
Biden administration's lawyer joined the argument against Mississippi. In Washington, Irv Chapman, Bloomberg Radio.
President Biden says his administration's work has begun to alleviate supply chain disruptions.
The CEOs I met with this week reported that their inventories are up, shelves are well stocked, and they're ready to meet the consumer demand for the holidays.
Biden says by prodding unions and port managers to step up and cooperate, the ports have expanded operations and sped up the movement of goods. Global news 24 hours a day. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Carol Massar live in the Bloomberg Interactive Brokers studio in New York. Well, back in January of 2020, our next guest found himself on a speedboat in the Saigon River in southern Vietnam. He was there to learn all about the supply chains of Asia. Well, we all know what happened next. Lockdowns around the world and then empty shelves. Supply chains as we know it rocked and changed. Christopher Mims is technology columnist at the Wall Street Journal, also the author of Arriving Today, From Factory to Front Door, Why Everything Has Changed About How and What We Buy. Chris joins us on Zoom from Baltimore. Chris, we have you for about a minute right now, and then we're going to come back and do more with you. But why did you initially write this book before the everyday American was thinking about supply chains?
And I want your crystal ball. I'm just going to say that.
Yeah, it really came from witnessing the transformation in terms of automation and other types of technology that was happening in supply chains because of Amazon. And I just thought, okay, if e-commerce is going to become the dominant way that we buy things, this is going to be huge for millions of American workers and for every single one of us because, we're all consumers. So I wanted to understand how those supply chains worked because it was clear that they were undergoing a transformation unprecedented since the invention of the shipping container.
Well, and it's interesting, just got 30 seconds and then we'll do some more with you. But it's safe to say that we all just expect stuff to show up at our door. We don't really think about the process. We've gotten so removed from it. For many of us, there are a lot of workers that are the backbone of our supply chains, but for many of us, we're removed from it, right? Just quickly.
Yeah, we're so removed from it, and we're even more removed from it than we used to be because of globalization. The supply chains are longer than ever. So when they get disrupted, we kind of throw up our hands and we're like, what's going on?
Yeah, exactly. All right, hold that thought. We're going to come back because we want to dig a little bit deeper into it. We want you to take us to where you were just as the pandemic was getting underway. We're going to come back with Christopher Mims. He's technology columnist at the Wall Street Journal. His book, it is so timely. As I said, I really do want his crystal ball. Arriving Today, From Factory to Front Door, Why Everything Has Changed About How and What We Buy. We're going to continue with him in just a moment right here on Bloomberg Business Week. And you are listening to Bloomberg Radio.
Updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg President Biden is considering Federal Reserve Bank of Atlanta President Raphael Bostic and Duke University law professor Sarah Bloom Raskin to be the Fed's top banking regulator, along with former Consumer Financial Protection Bureau Director Richard Cordray and others. It is an extremely choppy session on Wall Street. Big swings for stocks, lots going on. Let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. A huge reversal here for U.S. stocks amid the Omicron worries. Dow is currently down 149 points, was up 521. S&P's drop 11. NASDAQ is now lower by 153. The U.S. 10-year yield drops to 1.44%. Gold is still up 7. Bitcoin is a little changed. And among the main 11 SB sectors, telecom and consumer discretionary led to the downside. Leaders to the upside in the Dow, Amgen, J&J, and Procter & Gamble, while Salesforce plunged 10% among weakness. And in other news, the first confirmed case of the Omicron variant has been detected in the U.S. Walmart CFO says they are open to evolving customer demand on crypto, and they also see the supply chain starting to unclog. And also regarding the virus, Moderna's president said the Omicron booster could be ready in March. Wrapping things up, a busy night for tech earnings. C3 AI, CrowdStrike, Snowflake, and Splunk. I'll report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Christopher Mims. He's a technology columnist at the Wall Street Journal, also the author of the new book, Arriving Today, From Factory to Front Door, Why Everything Has Changed About How and What We Buy. Chris, before the break, we talked about when you started to write this book before the pandemic. So just take us back to that time in January of 2020 when you were exploring supply chains in Asia. What did you end up finding out, especially as the pandemic began to ravage the globe?
Well, what I witnessed was really the supply chain disruptions and the congestion that we're seeing now. So, I was standing on the quayside in Vietnam when goods are being loaded, just as the World Health Organization announced that there was, an issue in Wuhan, China. And then, it was inadvertent on my part that the book coincided with the pandemic. But, as I sort of followed the journey of those goods all the way to the U.S., I ended up, in places like, FedEx sortation facility, talking to the head of automation at FedEx about how what used to be the holiday peak was now every single day, and that they were anticipating that when the holidays did arrive, they would have what they called peak on top of peak. So you had this system that was really sized for, maybe a holiday peak that was then having to do that holiday peak just as part of its normal line of business. I also rode along with a UPS driver, who told me that, she was really keeping her everybody on her route supplied with, everything from the goods to homeschool their kids to, food and other things that they were ordering that were being delivered through UPS. And that every day she was as busy as she would normally be during the holidays. But of course, this was, nowhere near the holidays. So the entire system now has had to expand to accommodate what used to be its maximum capacity.
Hey, Chris, I too have ridden along with a UPS driver. Talk about being impressive, and they have technology and data to make sure that, they are aware of everything they do, how long it takes, and keeping track of it. It blew my mind. Having said that, so when you look at all the work that you did and really understanding the nitty-gritty details, the technology, the logistics, the people behind our global supply chain, do you clearly understand the mess that we're in today?
Yeah, I think I do. I mean, fundamentally, this gets to the heart of, the most important macroeconomic indicators, which drive everything, the entire stock market. Like, the reason that we're having inflation that the Fed cannot deal with right now is we're having a supply shock. The reason we're having a supply shock is that we're having congestion in the supply chain. And part of that congestion is due to the labor crisis. We don't have enough people to drive the trucks to move all the containers out of all these ports. So, Maersk's chairman just said the end of last week they had more than 80 ships waiting on average 18 days at ports all over the world, but in particular on the West Coast. So the shocks and the bottlenecks at every one of these junctures in the supply chain, I think, are key to understand, because these seemingly small things are what are driving ultimately, inflation. And I think a lot of investors fears that this new coronavirus will, hurt the economy and hurt the stock market.
Chris, do you think that the era of just-in-time, when it comes to the way that companies think about getting us our goods, the era of globalization, do we see any permanent shifts or changes to those things as a result of the pandemic and what we've learned?
I mean, I think you're seeing a lot of smaller manufacturers and retailers are having to stockpile more goods. So in that way, this era of lean everything is over for a lot of retailers. And, the biggest ones that are reporting that the supply chain is starting to clear for them, like Target and Walmart, they're the ones who order well in advance. So in some ways, I think, just in time, is disappearing. That said, as soon as this supply chain backlog clears, it could be as early as next summer. I think people will return to that because, of course, it just drives more returns on everything, returns on capital. Nobody wants to have a bunch of goods tied up in inventory if they can avoid it.
Right, but you think about those balance sheets and how they would change. It's funny, I grew up with, I guess you would say, kind of Depression-era parents, or parents who grew up with families that, had to deal with the Depression, and we always had a utility room that was stock full of so much stuff. But I think they remember, when things were there were lean times and you couldn't get stuff. And I do wonder the impact that this will have on all of us going forward, or perhaps our families going forward, and maybe companies, as you just talked about, going forward.
Yeah, I mean, how many of us have returned to that in some respect? I'll bet everybody listening to this has on average, 500% more toilet paper in their closet than they did before the pandemic. So absolutely, I think people are at every node of the supply chain, which, by the way, includes us, includes our individual households. People are being forced to stockpile more goods. And those Depression era mentalities, they don't go away. I mean, I don't know about you guys, but I have a household full of kids, and having lived through this, I mean, maybe they'll be like those Depression era silent generation people, where they grew up to stockpile a lot more goods because they remember, the pandemic of 2021 and 2020.
Right. And let's not forget the supply chain. We talk about it as logistics and technology, but there are so many people involved in it. And Chris really gets into that in his book. It is such a timely book, really brilliant. I hope you'll come back again, because this is certainly going to be an issue we'll be covering for some time. Be well. Christopher Mims, he's technology columnist at Wall Street Journal. His book, it's out, Arriving Today, From Factory to Front Door, Why Everything Has Changed About How and What We Buy. You're listening to Bloomberg Business Week, and we are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I think we've got a celebrity in the house.
I think so too. Look, we all knew this day would come, but it's not any easier.
I'm still trying to get him to 35. Come on, Dave.
4 more years, Dave. 4 more years.
Dave Wilson, marking his last day here at Bloomberg. You gonna stick around for a few more years?
What do you think I'm doing? Running for president? 4 more years? Jeez.
4 more years. All right, Dave Wilson's going to join us in just a moment. Let's get back to the market day and your top business headlines. Hey, Charlie Pellet.
Well, hello there. It's been a really choppy session. Right to the numbers. We've got some incredibly fast-moving markets. Volatility galore on Dave Wilson's last day here. We've got the S&P down 23, drop now of 0.5%. The Dow tumbling 246. Got to keep in mind, at one point we had the Dow up 520. Right now a loss of 0.7%. NASDAQ down 190, a drop of 1.2%. 10 years up 5/30 seconds. 10-year yield right now 1.42%. Gold up $6 the ounce at $17.80, up 0.4. West Texas Intermediate crude down 1.5%, 65.22 a barrel. Natural gas plunging by 7%. Bottom line here, stocks retreating today as traders assess the latest developments on the global spread of the Omicron coronavirus strain, with the U.S. confirming its first case in California. So again, recapping, we do have the S&P 500 index down 26 points, a drop of 0.6%. Coming up, it is the song of the day with our Dave Wilson. Yes, the final song of the day. Who truly knows it all. Dave, you will be missed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
All right, a little bit of air guitar. I can see Dave Wilson. I have no idea who this is.
Metallica.
Where's Bruce?
Hey, Bruce is on my tie.
He is on your tie.
You know, Bruce was in the intro. I mean, I'm not just a Bruce Springsteen fan, you know?
You play a lot of air guitar at home, huh?
Well, maybe some. Don't play the real guitar. Never learned an instrument.
You
But
got
my
time?
wife has been taking piano lessons, so she's got me beat.
Dave, you got time to learn now.
Yeah, you're right. But before I get to any of that, I just want to thank everyone that sent in emails today and posted on social media. The response has just been overwhelming, and I just appreciate all the comments. I mean, it's kind of staggering to think about how many people you've actually reached over all these years.
I have to say, Dave, I've traveled. I've been here at Bloomberg, not as long as you, but a long time, traveled a bunch. And when I am out in the field, people, you know, who they want to ask about is you. Yeah. And the reports that you do, the charts that you do, the stocks of the day that are often, we're like, what the heck was that company? People love it. They walk away with, information that they can use. So I got to say, you're very, very popular out there.
Well, thank you. I've tried my best all these years, so I figured for the last chart, you kind of had to do a career summation. So what it came down to was looking at markets going back to October 1st, 1990, my first day here at Bloomberg. And what really jumped out is, the phrase, Tina, there is no alternative to U.S. stocks. How many times have you heard that? It is so true when you look at historical performance. Russell 3000 index, pretty broad gauge of U.S. stocks. On a total return basis, so you figure in dividends, up at one point last month, about 3,000% over the past 31 years, which 4 times the gain you saw in an MSCI index of non-U.S. stocks, and then you saw smaller returns from U.S. bonds, international bonds, money market securities, commodities. It's like there's U.S. stocks and there's everything else, and that's the way it's played out for the better part of 31 years. Certainly going back to 2009 when that bull market began, even with what we saw last year, it's pretty darn obvious, that U.S. stocks have been the place to be. So the question becomes going forward, how long will they remain the place to be? If you see a market setback, will the U.S. take a bigger hit because of how far it's come? These are the kinds of issues that people are going to have to grapple with going forward. And unfortunately, I won't be here on the radio to help.
Yeah, but you'll still be asking those questions.
Oh, I will on my own, absolutely, as, shall we say, a private investor.
But isn't it wild, Dave? And the chart, okay, for you guys on radio, for YouTube, you can actually see it. But I mean, what has happened with stocks during your tenure here, it just outpacing every other, it seems like asset class, which is so interesting if you think about when you started where we are today, how much more complicated the markets are. There's so many different assets you can invest in. There's the securitization of markets, there's crypto, and yet plain old vanilla stocks have outperformed.
Yeah, and on top of that, you didn't have exchange-traded funds in 1990. And they dominate in large measure the U.S. stock market now. So there has been so much change, but a lot of things stay the same. I mean, you still have sort of the fight between investing and speculation. We've certainly seen the latter this year with the meme stocks, and new wrinkle on an old theme, you could say, and the tug of wars between growth and value and everything else. I mean, the issues that were in front of investors in 1990, I mean, they may be different in terms of their complexity or how they sort of line up, but they're still out there.
No Robinhood and no stock trading in your pocket either.
No, absolutely not. I mean, let's face it, the democratization of finance has been a real change. I mean, it's gotten cheaper to trade, it's gotten easier to trade, and so you see more people in the market trading, and that's where, the meme stocks come in because, what we saw this year with the way they were moving, I mean, you'd be hard-pressed to see it in similar terms looking back. You certainly had speculative bubbles over time, but the way they just sort of emerged, arguably out of nowhere, that's different.
I'm still betting on a Dave coin. There's Dogecoin, there's all these different things. We'll see what happens. Dave, we've loved your coverage of the markets, and I would say, Tina, there's no alternative to Dave, no doubt about it. Having said that, folks like you understand the history of this company. Do you have a favorite moment in time of being here at Bloomberg?
Oh, God, there have been so many moments, I mean, all of a sudden I'm thinking about being in Mike Bloomberg's backyard for one of his summer parties and seeing Matt Winkler, who founded Bloomberg News in large measure, in a black Speedo.
I want proof of that. I want a picture.
Oh, it's a picture in my head. Can I mention my stock of the day real fast?
Go for it,
yes,
Dave.
Please.
Arbutus Biopharma, ticker ABUS, up 40% in today's trading. And why? Because they won a patent dispute with Moderna.
That's a big deal.
It is. It's all about drug delivery technology, and Moderna has no standing to appeal, evidently, from our coverage. It just goes to show you that, sometimes the little guy can win in a big way.
Hey, can we ask you, how do you always find these stocks of the day?
A lot of it is looking at the Russell 2000 index, or more broadly, the Russell 3000.
Okay.
To try and get a sense of what's moving on a given day, and then just looking for the stories behind the stocks. I mean, Arbutus, actually, Kriti Gupta, who's kind of taking over for me in large measure, she found it, suggested to me, and it made sense because you're talking about a historical move, highest price since July of last year, so you've got size and scope to work with, and you've also got a story behind it. It's not just, traders pushing things around. In this case, you beat Moderna in a patent case. I mean, considering how public Moderna has been with its success with the COVID-19 vaccine, that's news.
And Dave, Moderna down on that news as well.
Yeah, absolutely. So there is another side to that story. Moderna's shares at the moment off 11%.
But it's easily been your top performer so far in the S&P 500 this year.
Right.
Well, Dave, I'm just going to say, as we get ready to wrap up, 31 years at Bloomberg, you've seen a lot of market cycles. You've explained a lot about different market cycles to so many of us here at Bloomberg over the years, for which we are so grateful. You have informed and entertained us daily like no one else. We will miss you. Dave, your glory days doing charts of the day, explaining every market move and being at our beck and call for when we had market and terminal questions, well, they are over. We We were blinded by the light by your brilliance and helpfulness, and for stumping us on the songs that went with the chart of the day. We were often dancing in the dark when it came to guessing those songs. You are headed for easier days, better days. And a Bloomberg Radio nowhere to be found. Thinking, well, maybe we'll run into you driving in and around back streets or at Cadillac Ranch, hanging out with Rosalita, or at 10th Avenue Freeze Out. Whatever you may do, please, please enjoy. We will miss you, and we will never forget the ties that bind you to us and us to you. And remember, Dave, you were, yes, of course, born in the USA. And Dave, you were born to run.
I have no words. I'm often not at a loss, as everybody knows. But Dave Wilson, you have meant the world to us. You've helped all of us. An era over at Bloomberg.
Yeah, well, thank you, everyone. And I say everyone, this studio is pretty darn crowded. I hope we're in keeping with COVID protocols at this point. I'm not sure, but I hope so. And it's funny, I mean, I'm listening to all those song titles, and I'm reminded that I've never been to the Cadillac Ranch. I have to get down there sometime.
Well, you'll have time. Stay safe, be well. We will miss you. You are welcome anytime.
Thank you.
As you know that. And take care of yourself.
But you know...
What?
How would you miss me if I don't go away?
See, it worked. You're going to stay till 35. You're going to stay. Take care.
Thanks.
Be well.
Thank you.
You are the best. There's no one like you. There is no alternative. Dave Wilson, 31
Dave,
years.
Thank you for everything, Dave.
You bet.
All right, we're going to check in with World and National News. Nancy Lyons standing by in D.C. Hey, Nance.
Dave, we are going to miss you, and of course, your song and stock of the day. Take care. There is no inherent constitutional right to end a human life. That's what Mississippi Solicitor General Scott Stewart argued at the Supreme Court today while justices considered his state's abortion law. Justice Sonia Sotomayor warned that the court should not be swayed to change decisions based on the court's change in makeup.
Will this institution survive the stench that this creates in the public perception that the Constitution and its reading are just political acts?
Sotomayor cited longstanding precedent for legal abortion in the U.S. A decision is not expected before the end of the court session in June. Americans' attitude toward the U.S. military is changing. Bloomberg's Amy Morris says people are losing confidence in those in uniform.
A national defense survey from the Ronald Reagan Institute says it is the first drop ever in the report's 3-year history. The number of Americans surveyed who say they have a great deal of trust and confidence in the military has fallen by 25 percentage points to 45% since 2018. Most troubling, the lack of confidence in the military among people under the age of 30, those same people who would be serving in the all-volunteer military. Amy Morris, Bloomberg 99.1 and 105.7 FM, HD2.
Authorities say a 17-year-old has become the 4th student to die from wounds he sustained in yesterday's school shooting in Michigan. The suspect, a sophomore at the school, was charged today with murder, terrorism, and other crimes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. And
I'm still getting over Dave.
Well, and I think what's interesting, I'm just going to go back to it. You know, he's known for so much around here. I love the chart of the day that he did and looking at how stocks have really outperformed in his tenure here at 31 years. And I do think about how much more. One of the first things I did in Bloomberg in my business news career was a mutual fund show. It was like investors were just getting active and in terms of it. And you think about how much has happened in the markets in 31 years during his tenure.
It was a perfect chart of the day, too, showing the rise of U.S. stocks, the Russell 3000 versus the international benchmarks.
Yeah, exactly, right? And so when you hear how many of our guests come on, and even when we're concerned about something going on in the United States, that ultimately that's where investors are finding growth. There's some certainty in terms of performance, and you see money continuing to flow often into those U.S. Companies.
Well, let's talk a little bit about what has changed, Carol, because Dave did mention the rise of retail trading and Robinhood, of course, and being able to do that from your pocket.
The democratization, right?
The democratization, exactly. One of the top stories that we're seeing on the Bloomberg terminal, most read, is a story from Dow Jones about Stephen Cohen's venture firm backing a 24-hour stock trading startup. The hedge fund billionaire, New York Mets owner, is backing a startup that wants to let investors trade stocks 24 hours a day, 7 days a week.
Well, and, you know, this is our 24/7 world, right?
Yeah.
And COVID really showed us when we all were working at home that it was kind of nonstop, but same thing with trading, right? Remember, you're younger than me, but like business news, it really used to get quiet in the summer. It used to get quiet on the weekends. It doesn't happen that way anymore.
I spent years working from the floor of the New York Stock Exchange, and as soon as that bell rang at 4 o'clock, that place emptied out because it was done.
Right, and it's not the case anymore.
No.
We do know that we talk about the globalization of supply chains. Well, we've certainly seen that when it comes to the markets, and these platforms enable you to trade at any time of the day.
Another story among the most read has to do with Kathy Wood, somebody who you've spoken to many times before. Her firm, ARC, has loaded up on Twitter stock after the stock hit a one-year low.
Yeah, it was interesting. And Kathy has been known for doing this, whether it's Tesla or another name that she's interested in. When there is a dip in that name, she's often a buyer. Stock of, I'm looking at shares of Twitter right now, they're down about 1.4%.
They were higher earlier in the day.
And the stock is down 20% this year. So we have seen certainly a pullback in that name. All right, let's get back to the world of business.
Here's Charlie Pellet.
Thank you very much, and here's what's going on. We've got 13 minutes to go ahead of the closing bell. What a day. Just an extremely volatile session, right to the numbers. At one point, you may have tuned in, heard us telling you that the Dow was up 520 points. Right now, the Dow is down at 235 points, a decline right now of just about 0.1%. We have the S&P 500 index lower now by 18 points, a drop of 0.4%. NASDAQ down 150, a decline of 1%. COVID angst sparking a major reversal for U.S. stocks today. 10-year's up 4/32, 10-year yield right now 1.42%. Spot gold up 0.3%, up 4.50 the ounce to 17.79. West Texas Intermediate crude down 1.1%, 65.43 a barrel. So again, recapping, stocks are retreating with the S&P down 18, a drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, what a day. Lots going on. Obviously, we listened to Jay Powell in his testimony earlier, second day of testimony up on Capitol Hill. What really, though, seems to be weighing on the equity trade is the concerns about the Omicron COVID variant and getting the first case here in the United States. We do have equity averages just bouncing off their lows of the session, but just barely. So let's get to it. Let's get to the drive to the close. Dan Pipitone is co-founder of Trade Zero America. He's back with us on the phone in Brooklyn. What do you...
Where do you even begin?
Where do we begin? Dan.
Well, Brooklyn is the borough, so we can start there.
So let's start there. This trade today, is it all about the Omicron variant?
It's looking that way. You know, what started off as one of the biggest gain days in quite some time. Super reversal with the announcement of some cases found in California. To be honest, I would have thought that some of the stuff would have been priced in already. I don't think anyone had any illusions that it wasn't coming here. I think everyone eyes wide open that it was going to happen, and I would have thought that some of this would have been priced in.
Okay,
but
thank you.
I'm being totally wrong.
Thank you. That's what I don't understand it. We there was even argument in the past few days that, gosh, it says that the United States doesn't sequence the same way that other countries, including South Africa, do, and the UK especially. So we don't have the same type of widespread availability of understanding who has what variant. So everyone knew this was coming, Dan. So why do you still think we saw the sell-off?
News, people are going to, sell on news, and the news hit, and there it is. But, I think we are seeing things bounce a bit coming into the close here. But, yeah, I like I said, I would have thought this would have been priced in. This move is a total surprise to me.
Interesting. So what happens here? I mean, I guess what we have to do is watch maybe some technical levels, or what are you watching here? And I'm curious, what are you seeing on the part of the retail investor who often, when they see a pullback, kind of like a Kathy Wood, find that as an opportunity?
Yeah. So, I mean, today's been pretty fun from a trading perspective. The volatility creates opportunity, and, that's what our traders love, really thriving on intraday volatility. As you guys know, we really accentuate our offering on the short side. We are facilitators of short sells and do so in a very robust way. So on days like today, having the wherewithal and the bandwidth and the capacity and access to trade bi-directionally is pretty powerful.
What are you seeing in terms of what people are actually buying, what people are selling, and what their activity is today? And how is that different from a typical day?
Sure. Today, we're seeing a lot of activity in ABUS, Airbus. Excuse me, Arbutus Pharma.
Yeah, that was Dave's stock. That was Dave's stock of the day.
Yeah.
There was some news out on this today, so this is a nice early morning gapper. Went to a high of $6.50. Right now, trading at $4.50. So stocks like this, we've traded a couple million shares on this today, and this is the stocks like this and market days like this are really what what the trader lives for.
Well, they're looking for what we have seen is more volatility, certainly in the trade. And that's what, investors are looking for, right? Some movement where they can actually play the market a little bit.
We've seen, lately, last couple of weeks, a lot of movement in the EV sector. Lots of movement, Tesla leading the charge, but, Lucid, Li Auto, Arrival has been a stock that's been in play lately, along with Fisker Automotive. The EV sector has been really attractive from the trader's perspective over the last month or so.
So tell me, one thing that we talked about, and again, going back to our colleague Dave Wilson, who's retiring today, he talked about the democratization of trading, and that's certainly something that you guys do at Trade Zero, allowing access for people to actually make trades that you couldn't do at the same way a generation ago. And I'm wondering to what extent you think this sticks around post-pandemic, the rise of the retail trader, because there was this narrative that people would go back to work and we wouldn't see the Wall Street bets crowd and the meme stocks.
Correct.
Has activity cooled off at all for you?
Well, I think from the measuring from the height of the pandemic on a sort of a per person perspective, things have definitely cooled off a bit. However, retail today making about 25% of the market volumes, up from about 10%, just in 2010. This phenomenon is not only happening here in the U.S., it's happening globally. And sort of the new dynamic is not really when retail is going to peter out, but really for institutions to get a better handle on what is next in focus for retail. As we've seen with Tesla, with crypto, there are many instances lately where retail has been the leader with the meme stocks, where now you have, dynamics where institutions are looking at things like investor sentiment and social media sentiment to really try and understand democratization of finance, the democratization of the dissemination of information, what's next for the retail investor. And so it's been interesting to see where, the dynamic of retail being the last to know has really been turned on its side, where institutions are now looking to retail for what they should be looking at next.
So as you look out at, I can't believe it's December, we're getting ready to wrap up the year, we're going to get, a new year. When you think about and I know you are tracking like what's going on your platform and the trades, and that's why we love talking to you. But when you think of some of those big macro stories that we always have to talk about, and I think specifically about the Federal Reserve monetary policy, Jay Powell up there on Capitol Hill, many would argue he was a lot more hawkish. Our Taylor Riggs over on the TV side saying it was a new Jay Powell, talking about getting rid of the word transitory, also thinking about, stepping up at a faster pace, those, asset purchases, getting rid of them at a faster pace. Is it interesting that here we have market jitters and volatility increased in a big way, and we had Jay Powell coming out that he didn't try to maybe taper that down a little bit today?
Right. The timing of all of this is interesting. However, what we've seen in the recent past, when the rubber starts hitting the road and comments like that actually start to take hold and they actually start doing it, and then there is economic, fallout from that, that's when, the pivot starts happening, and that's when, the messaging starts to change. So it's semi-refreshing that, that there is an end in sight to this up until, the general investing public starts feeling some pain. Those are the instances I feel like in the last 5 years where, the Fed and the government has stepped in a way that's been unnatural, prior to this, these last couple of years. So it's going to be interesting to see, when people start really feeling some when there's some news or people start experiencing, some fallout from these decisions, if these decisions remain.
What kind of fallout, for example?
High unemployment, wages falling, things like that.
Yeah, well, that stuff's not happening. I mean, look at the Beige Book and what we got today. Wages are going up in substantially in parts of the country.
Right. But a lot of people are still at home. A lot of people haven't come back to work. A lot of people have left the labor force. And so, now if the tightening does start happening, it'll be interesting to see kind of how it shakes out. And if tightening is what's needed, if that remains in place to the detriment potentially of the American worker.
And let's not forget that when the Fed and Jay Powell say things, it's perhaps may, like there are always caveats. Dan, we got to run. Dan Pipitone, co-founder of Trade Zero America, on the phone from Brooklyn on this Wednesday. And as we are counting down, getting close to that closing bell, we're seeing stocks move down to their lows of the session. We're seeing that on the S&P, the Dow, and the NASDAQ. All right, folks, we're going to be joined by our Bloomberg TV team. That's coming up next, Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde back, Taylor Riggs here, counting you down to the closing bell, and here to help take us beyond the bell. Carol Massar and Tim Stenovic bringing together our YouTube, radio, and TV audiences worldwide here to break down what's going on today. And Carol, it looked like we were coming in today for a pretty big rebound after yesterday's sell-off. But of course, the headlines that we got earlier in the day about the Omicron variant here in the U.S. and some of the potential measures to fight it, that really took the wind out of the sails of stocks.
Right. Think about how many days we're like, what's the catalyst? What's the correlation? Well, it's very clear today. Dr. Anthony Fauci there at the White House press room talking about Omicron, talking about it. You could see the equity markets just take a leg down. We are pretty much at our lows of the session, and it's broad-based. I think utilities at this point are the only major industry group in the S&P 500. Tim, eking out a little bit of a gain.
Yeah, it's quite the range, too, especially with the NASDAQ today. It was high as 1.8% to the plus side and as low as right now, down 1.8% to the downside.
Yeah, and this is committed movements. Initially, it was committed buying. Now it's committed selling. Volumes more than 44% higher than usual on the S&P 500, more than 57% higher on the Dow, Taylor.
And the internals yesterday we were hearing were pretty negative. When you were taking a look at the individual stocks, and you're well more negative than you are positive today. So certainly seems like that selling pressure, Romaine, continues, and this brings up the question if the flight to safety within the bond market is happening, or like yesterday, a mix of a pull forward of some of those rate hikes.
Yeah, and it makes you wonder sort of how prolonged this could be or not here. You talk about the flight into bonds, the flight back into gold here, and even in the equity market with regards to some of the individual movers, we're now talking about McCormick and Hormel and Clorox, sort of a lot of the consumer staples names. What does that tell you about the mindset right now? Even something like Apple, which was kind of the big defensive play out there. Even that's not really doing anything of note here on the day. As we get the closing bells here, Apple going to finish the day down about 0.3%. You see the NASDAQ composite down about 1.8%, the S&P 500 down about 1.2%, the Dow Jones Industrial Average down about 1.3%. And we have to talk about those small caps, that cyclical trade here. The Russell 2000 is officially in correction territory. That was, of course, confirmed on Tuesday here, moving deeper in that direction, on Tuesday, I should say, moving deeper in that direction, down 2%, 2.3% on Wednesday.
All right, we're going to dig deeper into the groups and what was really dragging down. It was pretty much everything, I guess, in the S&P 500. Just take a look, though. 98 names actually able to eke out a gain, and it's got to be some of those safer plays that we saw certainly during the shutdown and the pandemic. 405 names, though, tailored to the downside.
And Carol, really some of the safety names, as both you and Romaine have been pointing out for our radio audiences, we do the sector winners, the sector losers. There is some red in the green, but let me point out the green. It's utilities, that's a bond story. Technology, a long duration asset, that's a bond story. Then it's food and beverage. It's household products, right? How much are we talking about restoring up again within the house? So let's keep our eye on that, as those are up about 1% or so. To the downside, and there's a lot of it, we could go anywhere from energy all the way down to media, food and staples again, even auto components that are up the worst, about 2%, Carol.
All right, I was a little nervous when it came to my gainers, concerned that they wouldn't hold on to their gains. They did. So I'm going to talk a little bit about drugs, chips, and beer. Vertex Pharmaceuticals up about 10%, pretty much holding on to its gains, top in the S&P 500 and the NASDAQ 100. Their experimental drug VX-147 was well tolerated in a treatment. It provided some clinical proof of concept for the first genetically targeted approach to treating kidney disease. So that one really rallying in today's session. Want to talk about the chip stocks because we did see them moving in a big way. AMAT holding on to a 3% gain today. Microchip, Micron Technology, these were all moving and top in your major equity averages. Citi raising its price target on AMAT to 175 a share, stock closing at 151 and change. That 175 target was up from 160, and Citi maintaining its buy rating. And then I want to mention Build-A-Bear Workshop, very well known to any of us who have kids.
Yeah.
We know Stuffies. That stock was up about 30% by the close. It's up about over 350% this year. Company reported record revenue, a special dividend, a $25 million share buyback, and they raised its full-year guidance. That stock, though, I know it's a small cap, but it's been on it.
Yeah, it is a small cap. Before we get back to the decliners, just go back to some of the headlines here on the S&P 500. This is the worst two-day rout that we've seen on the S&P 500 going back to October of 2020. We should point out the S&P and the NASDAQ each close right now at their 50-day moving average. They're each down about 4% from their all-time highs, which of course were back on November 18th and November 19th. The Russell 2000, which hit a record high on November 8th, is now down 12% from that and well below now its 200-day moving average.
Yeah, some really important context there. Let's talk a little bit about some of the decliners on the day today. Moderna suffering a 12% close lower, the most since November 5th. This is because it lost an appeal of a patent ruling involving a rival's drug delivery technology that could make its COVID-19 vaccine vulnerable to infringement suits. At issue are two patents from Arbutus Biopharma Corp. Interestingly enough, that stock higher by more than 40% on the day today. Salesforce, the cloud-based customer relations software maker, finishing the day down by more than 11%, almost 12%. Revenue and profit for the current quarter fell short of analysts' estimates. The company also announced that Brett Taylor will be co-CEO along with Mark Benioff. If that name sounds familiar to you, Brett Taylor, that's because earlier in the week he was appointed chair of Twitter's board as well. Also, Allbirds finished the day down by more than 16%. The company reporting earnings yesterday. Guidance came in conservative, but analysts were broadly positive. We got some upbeat commentary from Piper Sandler, Telsey Advisory Group, William Blair, and more.
Meanwhile, you're looking at the decliners. I'm looking at what's happening in terms of commodities and what's been on the decline. It's been a roller coaster ride for stocks today and indeed for oil as well. Remember, we're all bracing for what OPEC Plus will do in terms of production. Many feeling they could curtail supply because, well, price has been on the downside. And on the downside, they went again today as we see the first case in the US, in California, of Omicron. Brent crude off by more than a percentage point. $68 is where we trade. $65 is where we trade on WTI crude. Gas actually coming down a little bit. Basically, the world of commodities reflecting a worry about economic growth in the US. Globally, if we see a pickup in the variant, I look at that like flight to safety that we've seen in the FX market as well. Canadian dollar falls along with some of those commodity names. Same too for the Aussie dollar by 0.4%. Where does the money flow? Back into the US dollar, which was actually basically eroding a lot of its losses earlier in the day. And indeed, Japanese yen up 0.3%, your typical flight to safety. And sovereign bonds, I mean, a very mixed picture when you look across the global news in terms of yields rising over in Singapore and Ireland, down in Greece and Canada. So idiosyncratic moves. What's happening in the US, Taylor?
Yeah, really incredible. Sort of the flight to safety we've seen, the flattening of the yield curve. I want to pull up the 2s, 10s, and 30s as we always do. These are intraday moves, which are interesting. But if you also take a look at the long end, the 30-year yield is now the lowest since January of 2020. And the 2s, 10s yield curve also the flattest since January of 2020. This is a 10-year, which a week ago we were at a 166. We're now making all our way back down to a 141, the lowest that we've had since September. But a lot of flattening out on the long end. I mean, a 175 on the 30-year. Romaine, a week ago, we were at 2%.
Yeah, I don't get that. And I also don't get, what do you make of the fact that the real yield, the 10-year real yield at least, is still below that 1%, negative 1%?
Yeah, it is still very negative. That, as we heard from Alicia Levine, Carol, speaks to the loose, massive liquidity that is still in this system, and maybe the pull forward of the rate hikes, which means lower growth, lower inflation on the long end, and then, of course, maybe a flight to safety as well, getting this low on the 30-year.
You know, I've been thinking a lot about what Jay Powell has set up on Capitol Hill this week. What a wild week that here we have volatility in the markets. There's concerns about another variant. We have a lot of questions out there. They're saying it's going to be 2 to 4 weeks before we really understand what this variant is about and what impact. I was just looking at a headline that South Africa's health ministry reported that virus cases doubled in the last 24 hours. This is on our Markets Live blog. It's just a reminder of how these variants can ramp up so quickly. What will this ultimately mean in terms of what Jay Powell said, who seemed like he was a new man, Taylor, right? In terms of being a lot more hawkish. Is he going to have to dial it back?
Well, we should also just point out, too, I mean, it's not only about the number of cases and the spread, but also about the severity. And we've heard from Dr. Fauci, we heard from the governor of California, making the case that the symptoms, at least based on what they know now, are a bit milder than what they were for, say, Delta or for Beta or the first variant that we first got.
Right, but it's still early. As Fauci said, these are breadcrumbs, and be careful about holding on to and latching onto breadcrumbs. I got to tell you guys, I was a little confused as to the market drop that we got mid-afternoon, because I really thought that people realized that this new variant is making its way around the world. We've seen this play out before. These things don't care about borders. Why wasn't this priced in? What's different? What changed?
But there's been a lot more chatter about that. We're expecting to hear from Biden tomorrow, apparently on some sort of COVID protocol. And that's really what we're talking about now is travel. It's economic activity and the movement, right?
And look at what's happening in terms of yields. Taylor, this is where you come into your forte, because US 30-year yield falling below 1.75%, the lowest level since January 6th, of course, a day that is etched on all of our minds.
Yeah, you know, we've been talking a lot about this, and not to get cute or smart here, but the equity markets, every equity strategist is sitting next to the bond strategist, asking them sort of what moves are you looking at, because the bond markets had been hinting that something was underway. Anytime, Romaine, we thought we got to 175, 2% on the 30-year, you had massive buyers coming in. And then, Carol, to your point, when we talk about that new Jay Powell, really thinking if it is a more hawkish Fed, then what pressure does that put on the long end of the curve?
And we have to start thinking about dates. You know, as Romaine, you said, that December meeting becomes even more important. But will he have, depending on, you know, are companies holding back on capital expenditures or hiring people? So then do we have to wait for another jobs report come January before the Fed feels confident about doing things? I mean, I think the data points, the daily one, as well as the COVID data points are going to be really key.
How confident are consumers? How confident are people on the ground?
Right.
Are they willing to go out?
Very confident.
They see these headlines. Do they go? Do they buy a plane ticket for Christmas or for wherever they're planning to go?
Exactly. All right, we're going to continue this conversation, no doubt about it, into tomorrow. That's going to do it, our market wrap, our Beyond the Bell segment, live on radio, YouTube, and on television. We'll see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
We just have more questions. That's what it is.
That's okay. We can ask the questions.
No, exactly. But I mean, in terms of the outlook, I mean, I think there's uncertainty once again back in the market.
We'll get some more certainty on Friday with that jobs report.
We will indeed. All right, let's get to World and National News and Nancy Lyons.
Thanks, Carol. A case of the COVID-19 Omicron variant has been detected in the U.S. Dr. Anthony Fauci, the nation's top infectious disease expert, says a traveler who returned to San Francisco from South Africa tested positive.
The individual is self-quarantining, and all close contacts have been contacted, and all close contacts thus far have tested negative.
Fauci says the traveler was fully vaccinated, but he does not believe the individual had a booster shot. We will not hear a decision until next June, but the Supreme Court today heard arguments centering around a Mississippi law banning abortions after 15 weeks. Mississippi contends the ruling in Roe v. Wade was wrong and that states should be the ones deciding. Julie Rickleman of the Center for Reproductive Rights told the justices that she disagrees.
The individual is self-quarantining.
Mississippi's ban on abortion 2 months before viability is flatly unconstitutional under decades of precedent. Mississippi asks the court to dismantle this precedent and allow states to force women to remain pregnant and give birth against their will. The court should refuse to do so.
Rickleman says nothing has changed to justify reversing the decision. Chief Justice John Roberts wanted to know why 15 weeks is not enough time for a woman to make a decision concerning her pregnancy. A 15-year-old suspect in yesterday's deadly high school shooting in Michigan is being charged as an adult. Ethan Crumbley is accused of killing 4 students. Now officials confirmed today a 4th student has died from his injuries. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Just watching shares of Splunk in the after hours. It is down about 6%. This is after the company reported its latest quarterly update. The company third quarter revenue, $665 million. That was a beat. $645.2 million was the estimate. Fourth quarter revenue, and maybe this is what is worrying investors, I'm guessing, pretty safe to say, the outlook. Fourth quarter revenue, what they're looking for, $740 to $790 million. Tim, that's a miss. The estimate out there on the street, $827.3
Yeah, you got
million.
it. It's all about the guidance. It's about the outlook. Splunk cut its revenue forecast for the full year. The guidance also missing the average analyst estimates. Shares down in the after hours as a result.
Well, this is a company that's been aggressively shifting to the cloud. Our Bloomberg Intelligence team highlighting that as something to spur revenue growth going forward. And so that is something that you definitely want to keep a watch on when it comes to this story. Splunk increasing its fiscal year cloud ARR outlook. So they are certainly talking about this in the commentary.
But after today, today's trade, which doesn't take into account the after hours move, Splunk down more than 34% so far this year. So it's been a challenging year for the company. The company did say, according to Graham Smith, the interim CEO, Q3 marked a significant milestone for Splunk as it was our first billion-dollar cloud ARR quarter, with cloud accounting for a record 68% of our software bookings. Graham Smith continued, our third quarter results underscore the role Splunk is playing in our customers' digital transformations and the immense trust organizations have in our data platform and security and observability solutions.
All right, so Splunk is down almost 6%. On the other side, Snowflake is up about 7.8% in the after hours. This company coming out and talking about the fourth quarter and saying adjusted operating margin, looks like fiscal year adjusted operating margin of down 4%. They had seen down 9%, so that's a pretty significant improvement. And that company also talking about third quarter adjusted operating margin. So the past quarter was 3% versus down 8% quarter over quarter. So it looks like some improving metrics for that company. Third quarter product revenue also was a beat for the company. And again, we're seeing Snowflake up about 10% in the after hours. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pettit. Lots of after-the-bell earnings. We begin with Splunk, a software company. It forecast revenue for the fourth quarter. Its guidance missed the average analyst estimate. Splunk shares down now by about 1.5%. We also heard from another software company, Snowflake. It boosted its product revenue forecast for the full year. That guidance beating the average analyst estimate, and shares of Snowflake right now, they are up by 11.8%. What a day on Wall Street. An absolutely wild ride. Big swings between gains and losses. The Dow have been up 520 points at one point, up 1.5%. It ended the day down 461 with a loss of 1.3%. In fact, stocks had their worst two-day sell-off since October of 2020 as traders assess the latest developments on the spread of the Omicron coronavirus strain, with the U.S. confirming its first case in San Francisco. 10-year yield, 1.42% now. Gold up 0.3%, $17.80 the ounce. West Texas Intermediate crude down 1.4%, $65.23 a barrel. Again, recapping on the equity numbers, S&P down 53, a drop of 1.2%. The Dow down 461, down 1.3%. NASDAQ down 283, down 1.8%. I'm Charlie Pettit. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So if you're looking for an outperformer, you've got to check out shares of Build-A-Bear Workshop, because the stock, at least heading into today's session, was up almost 390% this year. Company today reported record revenues, a special cash dividend, plus a $25 million share buyback. And I got to say, we had a fair share of the company's stuffed animals in our home when my daughter was growing up.
Hey, you know what? After today's 27% increase in the share price,
It's one of my gainers of the day.
It's up 407% this year, Carol.
Yeah, it's been on such a run. So let's get to it. Joining us from the New York Stock Exchange is Sharon Price John. She is Build-A-Bear Workshop's president and CEO. Sharon, so nice to have you here with Tim and myself. Sounds like things are going really well. Give us some color on the quarter that was and the outlook that you expect it to be.
Yeah, thank you so much, and certainly appreciate you being a customer of ours over the years. I always love to hear that. But we did announce this morning record revenues and pre-tax income for fiscal 2021 third quarter. As you mentioned, we declared a special dividend and authorized that stock buyback program, but also raised the annual guidance. And, you know, it's really, we're looking at a revenue number that's the best in about a decade, as well as that pre-tax income that I was speaking of. That's the best in our corporate history for the third quarter and the first 3 quarters of the year.
Yeah, go ahead, Carol.
Well, you know, one thing I just wanted to ask you, Sharon, is why the buyback, why the special dividend? Is that the best way to use some of your cash on hand?
Well, it's one way to use our cash on hand. We have a robust capital plan, and a portion of that we felt with these record earnings is just a great opportunity for us to directly and immediately return some of that value to our shareholders. Of course, the stock buyback has a much different purpose. It's more of a recognition of the board noting and believing in the future of the company. But we also outlined some strategic objectives and opportunities for the future and how we're investing, and that's inclusive of continued and acceleration of our digital transformation, as well as the evolution of our retail footprint and the way we go to market and continue to push into the more robust approach to omnichannel. I know that people don't always recognize the Build-A-Bear as an online retailer, but as with many, through the COVID experience, we really did lean heavily into e-commerce. We had already been on that road from a strategic perspective for a number of years.
How much of your business is e-commerce versus store? Because going to the store is such an experience. I know it was something that my daughter loved to do.
Well, you know, but Build-A-Bear's now, which is important to understand, Build-A-Bear's now multi-generational.
Yeah.
So we're coming up on our 25th year. Don't let that make you feel old. We've just been around for a while, and that's okay, because not only do parents now want to take their kids, they actually want to experience Build-A-Bear again. And some of that is our collectibles product like Pokemon or Harry Potter, and they go online. So our business just a few years ago was more in the 4 or 5% range of total sales, and now it's up to 20%.
Yeah.
And what's the goal? How high do you want to get that?
Well, we're really, the key is to grow total revenue. And because e-commerce for us is on par from a profitability perspective to the rest of our revenue in stores, we just want to be there the way guests want to interact with us. If they want to go online and purchase, they can do that. If they'd like to come in store and have that very special retail-tainment experience that we're famous for, they can do that too. And it's really servicing different needs for different types of guests.
Right.
Clearly, if you're a gift giver, you might want to go online because we'll send it directly to the end recipient.
Hey, got to ask you, which we ask every leader of an institution or organization or company, supply chain issues. How rough is it for you guys?
Yeah, we, like so many toy industry people, we do source from Southeast Asia, and it has been a challenge. And, we're juggling containers and products and reprioritizing on a regular basis. We did make a special note, though, in the call this morning that we believe we have a robust or a really strong inventory position for the remainder of the holiday season. We feel like that we have done our projections appropriately, and really importantly, particularly for that special experience and memory that people want to make in our stores, we actually have enough bear builders, which would be our sales associates, to make sure, to the best of our ability, that everybody has that great Build-A-Bear moment.
So not worried about the holiday season?
Right. Was that a no? No problem?
We're always worried about the holiday season.
Okay.
It's our biggest season. It's the biggest month of our biggest quarter. But we feel as good as we can about what we've done. The team has been really strong in planning. We were way out ahead of this. We ordered a lot of product early on. We pulled forward our Christmas orders. And we're actually in an increased inventory position versus last year, same time.
All right, Sharon, very briefly, raised wages for these sales associates. How much trouble are you having getting labor? 10 seconds, actually.
10 seconds. Well, that was my point. We actually have been able to hold on to our labor force. We don't have as much churn as a lot of other people, and it's probably because it's fun to work at Build-A-Bear.
Is there a Build-A-Bear movie coming, real quickly?
We have all kinds of movies, but that's going to take another interview, apparently.
You're going to have to come back.
Yeah,
I know
please do.
Build-A-Bear Entertainment, you guys are creating content, so I want to talk a little bit more about that. Do come back. Have a good and safe holiday season. We've been talking with Sharon Price John. She's Build-A-Bear Workshop's president and CEO. That stock, as we mentioned, up 407% this year. You're listening to Bloomberg. And yes, you heard it right.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we talked about lots of investments. I was thinking about Dave Wilson, our conversation, and how the financial markets have evolved during his tenure here, 31 years. You know, and one of the things we often talk about is investing in art.
We do. Well, fortunately, in just a few minutes, Scott Lynn, the founder and chief executive officer of Masterworks, is going to be joining us. It's a platform that securitizes art and allows you to buy those high-end paintings that, you know, are only accessible to billionaires.
Get a little piece of that masterpiece?
Yeah.
Something like that?
Yeah.
All right.
By a Banksy.
We're going to talk about that in just a moment. In the meantime, back to your top business headlines. Charlie saw a headline on Square.
Indeed, and Square is changing its corporate name to Block Inc., signaling a push beyond the company's main sales and payments products into businesses like music, cash transfers, and the blockchain developing story. But again, worth repeating, Square changing its corporate name to Block Inc. Lots of earnings after the bell. The software company Snowflake rallying 12% in post-market trading after it boosted its product revenue forecast for the full year, beating the average analyst estimate. Splunk shares lower after its revenue and forecast fell short of estimates. It does see revenue in the range of $740 to $790 million. Estimates, according to Bloomberg, $827 million. Stocks had their worst back-to-back sell-off since October 2020 as traders assess the latest developments on the global spread of the Omicron coronavirus strain, with the U.S. confirming its first case in California. Now, at one point today, the Dow had been up 520 points before ending the session with a loss of 461. Dan Pipitone is co-founder of Trade Zero America. He was our guest right here on Bloomberg Business Week.
Super reversal with the announcement of some cases found in California. You know, to be honest, I would have thought that, you know, some of the stuff would have been priced in already. I don't think anyone had any illusions that it wasn't coming here. I think everyone eyes wide open that it was going to happen.
And this headline now from the Bloomberg Professional Service. The Walt Disney Company has named Susan Arnold to succeed Bob Iger as chairman. Again, worth repeating here. Disney, after hours, naming Susan Arnold to succeed Bob Iger as chairman of the Walt Disney Company. Again, it was a down day on Wall Street with the numbers worth repeating as well. The S&P down 54, down 1.2%. The Dow down 1.3%. NASDAQ down 1.8%. 10-year up 11.30 seconds. 10-year yield 1.40%. Spot gold up 0.4%, 17.82 the ounce. West Texas Intermediate crude up 1.1%, 65.46 a barrel. Again, the Walt Disney Company naming Susan Arnold to succeed Bob Iger as chairman. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So there are hundreds of art markets, and according to a Bloomberg report late last year, roughly 310,000 businesses selling art and antiques worldwide. We saw online art sales surge during the pandemic, and we've often talked on air how art can have a role in an investor's portfolio. And I did come across a stat, Tim, that I thought you might find interesting. Between 1995 and 2020, contemporary art outperformed the S&P 500 by 174%, nearly 3 times the returns, according to the Citi Global Art Market Chart. So, art, it's a thing.
Well, that's exactly
especially for
why.
investing.
That's exactly why Scott Lynn, our next guest, founded Masterworks. He's the founder and chief executive officer of Masterworks. He joins us on the phone from New York City. Scott, how are you?
I'm doing well. Thanks for having me.
Well, Carol just went through some of the numbers there, and it's actually interesting because I've seen some of the numbers that she quoted as part of your own press materials about why you started Masterworks. Take us into the origin story here, because you have a background in art, but why did you see the need to securitize art and allow everyday investors to have access to paintings that are and pieces of art that have in the past only been available to multimillionaires and billionaires?
Sure. I think if you look at the size of the asset class, it's a $1.5 trillion asset class. Every year, $60 billion in art sells. As you mentioned, contemporary art has appreciated at 14% a year for the past 25 years. The challenge has really been the only way to allocate to the asset class is if you have millions of dollars to buy painting or tens of millions of dollars to build a portfolio. So historically, it's really been inaccessible to almost all types of investors. So our view is that this is an asset class that deserves a role in an investment portfolio, and people should be able to invest in art just as they can invest in public equities or other asset classes.
Right. We are seeing certainly a trend, a move that certain asset classes that maybe were for the wealthy, the accredited investor, whether it's private equity, you name it, trying to be opened up to a wider array of investors. Tell us how it works for people who are interested in investing in art at Masterworks.
Yeah, so when we purchase a painting, we actually take the painting and we file it with the SEC as a public offering. So all types of investors can invest in these paintings, whether they're retail or accredited. So each individual painting is effectively a vehicle that an investor can choose to invest in. So we have investors who come to the Masterworks website and they basically pick and choose individual paintings to invest in and then build their portfolio of art over time.
Where do you keep all of this art? Because according to your press materials, Scott, you are the largest buyer in the art market, buying between $300 and $400 million worth of art this year. Where is this art kept, and can people visit it and see it?
You know, with COVID, it's certainly been challenging. The goal of the business after we effectively close these offerings and have a few thousand investors in each painting is to lend the works out to museums or institutions. I think museums in today's world are just now spinning back up after the pandemic. But over time, we would like the art to be seen in public spaces or museums.
Well, and what kind of art are you choosing? Because, in kind of prepping for this and reading in, Bloomberg has done a lot of reporting on it through our Pursuits group and our investing group that, most art will almost certainly lose value and never gain it back the second we put it on a wall. To be quite honest, it's really some of those, masters and those well-known iconic artists where you see value creation. So how do you pick and choose your art?
Yeah, it's a really interesting question. So one of the things we do at Masterworks is we have the leading research team in the art market to analyze how different segments of the market are performing over time. And one of the things you very quickly realize when you look at art market data is that returns in the art market are not really predictable until you get to paintings valued roughly more than $500,000, which means that the investable segment of the art market tends to be this $500,000, $1 million per painting and on up.
Right.
So that's the segment that we're primarily focused on. Outside of that, when we look at the market and which segments to invest in or which segments we buy paintings from, we're really looking at which individual artist markets do we think are accelerating most quickly with the lowest degree of risk or volatility.
All right, hang on for a second, and we're hopefully going to reconnect with you and get a cleaner line. Scott Lynn, he's founder and chief executive officer at Masterworks, on the phone from New York City. And I just want to mention that Disney, we're watching that in the after hours, Disney naming Susan Arnold to succeed Bob Iger, longtime Disney CEO, but to succeed Bob Iger as chairman. Not seeing much movement in Disney shares.
All right, let's get a check of the latest world and national news. Nancy Lyons standing by in D.C. Hey, Nance.
Thanks, Tim. The country's top infectious disease expert, Dr. Anthony Fauci, has confirmed there has been a case of the Omicron variant of the coronavirus detected here in the U.S.
The California and San Francisco Departments of Public Health and the CDC have confirmed that a recent case of COVID-19 among an individual in California was caused by the Omicron variant.
Fauci says the California patient recently traveled from South Africa. Former President Trump reportedly tested positive for the coronavirus just days before his first debate with Joe Biden in September of 2020. That's according to his former chief of staff, Mark Meadows, who details the timeline in a new book to be released next week. Trump is denying the account. The Supreme Court has heard arguments today over a Mississippi law that bans most abortions after 15 weeks of pregnancy. The Department of Justice's Solicitor General Elizabeth Prologer argued to maintain Roe v. Wade as the law of the land.
The court has never revoked a right that is so fundamental to so many Americans and so central to their ability to participate fully and equally in society. The court should not overrule this central component of women's liberty.
Prologer says there's nothing that's changed to justify removing a woman's right to choose whether to end her pregnancy ahead of viability. Some conservative justices, though, seem to signal that since the right to abortion is not mentioned in the Constitution, it should be left to the people in the states. A decision is not expected from the Supreme Court until next June. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. Just want to rehash some news that came after the closing bell. We mentioned Disney. It looks like the stock is really little change, maybe up about 0.1%. But the news is that the Walt Disney Company is naming Susan Arnold to succeed Bob Iger as chairman. And I don't think this was unexpected, or was it?
Yeah.
It's hard to,
well, look, I mean,
we're trying to
Iger's,
figure it out, right?
Yeah, Bob Iger stepped down a couple years ago as longtime CEO. Bob Chapek took over. And Disney saying that Arnold, who has been on the Disney board for the last 14 years, she's going to succeed him at the end of the year when he does step down. As executive chairman of the board, Bob Iger said, quote, Susan is an incredibly esteemed executive whose wealth of experience, unwavering integrity, and expert judgment have been invaluable to the company since she first joined the board back in 2007.
And what's really interesting is Chapek took over as the CEO back in February of 2020. It was just before the shutdown of our world. And I remember that was a huge headline when we saw that switch from Bob Iger, who had been at the company for so long. Many would say really took this company from one level to another level in terms of brands that it acquired, whether it was Pixar, whether it was Marvel, and really taking those brands and putting them across the company. Bob Chapek, of course, has been CEO for a while now, or about a year and a half or so, coming up on 2 years in February of 2022. But Bob had remained as chairman,
right.
And now we're seeing somebody. So this, I guess, effectively really cuts him away from at least any kind of position, certainly on the board at the company.
And looking forward to Susan Arnold's tenure, remember, she was an operating executive at the Carlyle Group for years. She was there from 2013 until very recently, 2021. Earlier, she was at Procter & Gamble, and before that, she was a director at McDonald's from 2008 to 2016.
Right, and Bob was chairman of the board since 2012, executive chairman since 2020, and really directing the company's creative endeavors. So, again, not seeing too much stock reaction, though. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 had its worst two-day rout since October of 2020 today, with the S&P tumbling 54 points, down 1.2%. The Dow dropped 461, down 1.3%. Nasdaq down 283, lower by 1.8%. Worst back-to-back rout again since October 2020, as traders assess the latest developments on the Omicron coronavirus strain, with the U.S. confirming its first case. Lots of after-the-bell news. Briefly, the Disney company electing Susan Arnold as chairman of the board, effective December 31st. She'll succeed Bob Iger. Square Inc. changing its corporate name to Block Inc. Snowflake shares jumping more than 11% in extended trading after the cloud software company reported better than projected revenue. And Splunk shares lower now after hours, after its revenue and forecast fell short of estimates. 10-year up 12.30 seconds, 10-year yield 1.40%. Gold up $8.90 the ounce. Spot gold up 0.5%, 17.83. West Texas Intermediate crude down 0.7%, 65.69 a barrel. Again, recapping, stocks lower, volatile session, wild day with the S&P down 54, down 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie. And speaking of volatility, some headlines crossing the Bloomberg terminal. Turkey's President Erdogan removing the Treasury and Finance Minister. This is a big deal. We know that Turkey has been having a very difficult time as the president has pushed for easier monetary policy despite the plunging lira. The central bank fought to shore up the plunging lira. That was our story from earlier today, intervening in foreign exchange markets for the first time in 7 years. The monetary authority saying that it took that action due to unhealthy price formations, in the lira, which has been in a free fall since the president renewed his push for lower interest rates. And this is just a reminder of what happens when you pursue potentially the wrong monetary policy.
Well, let's get back to Scott Lynn, founder and CEO of Masterworks. He joins us on the phone from New York City. Scott, we talked already about how you securitize works of art by filing with the SEC. You also have another part of the business at Masterworks. You have a secondary market where investors can trade these shares in paintings. Is this the only place where people can trade their shares of Masterworks?
It is. It's really the first example of a secondary market for art. So people are trading shares and paintings just like they would otherwise trade shares in companies.
So would you be able to envision some sort of future where people could then, I don't know, through the blockchain or through some sort of transferring method to transfer securities, they could trade that through StockX or through another secondary marketplace?
I mean, we do think there's definitely a trend around tokenization of assets broadly. At Masterworks, we don't do anything on the blockchain today because we're a regulated business between the SEC and FINRA. I think it is interesting long term, and obviously a lot of blockchain alternatives do have lots of liquidity. Some of the crypto markets are some of the most liquid markets there are, but we're not doing anything with that today.
What would happen, and I'm just thinking about worst case scenario here, and forgive me, but I have to ask, let's say Masterworks ceased operations. What would happen to the value of somebody's securitized art if that happened? Because then they wouldn't be able to trade it on the Masterworks platform.
Yeah, I mean, all of our investment vehicles are structured so they're bankruptcy remote. So each individual painting, as I mentioned previously, is a standalone public company. So although that secondary market liquidity would not exist in that scenario, the entity would survive nonetheless.
Wow.
Interesting, really interesting, as we talk about the evolution of markets and different investment assets. Hey, Scott, what I'm kind of curious is, what's the interest? How much volume are you doing? Who's your typical investor?
I mean, the business has been growing rapidly, so we we see all types of investors. We have 200.
What's rapidly? What's rapidly?
So this year, the business has grown about 600%. We're raising $700 million a year now on a run rate basis. We'll buy more than $1 billion in art next year. So we've quickly become really the largest player in the art market, and that's based on 260,000 investors who have signed up on the platform. And there's small investors who sign up who invest as little as $500 or $1,000 per painting, and there's large investors who are investing much more. But it's really a broad base of all investor types.
So if you sign up, are they active investors, or are they just kind of poking around and interested?
I mean, everyone who signs up has a call with our membership team, and we run them through suitability and talk about how you're investing today, what your risk appetite is, how you think about art as part of your overall investing portfolio or strategy. So we take a very hands-on approach to get investors engaged, investing quickly, and learning about the asset class.
So how quickly then, though? So of those 260,000 investors, I think you said, how many of them are actively invested?
Well, it depends if they're invested in our primary offerings or if they use our secondary market. But I would say around a third today are actively investing in some way, shape, or form.
Okay, interesting. And you said the growth in the business was 600%. Is that top line growth, or like what does that number mean?
Yeah, for us, it's really the same, right? So as we raise AUM, our management fees increase accordingly. So we've just seen huge growth and people who are interested in learning about a new asset class or an asset class that they thought was otherwise inaccessible to them.
So what are management fees? And I imagine there are transaction costs as well.
Yeah, our management fees are structured just very similar to private equity. So we charge 1.5% a year, and then 20% carry or profit when the painting sells. The transaction fees are really incurred. The transaction fees are really incurred through third parties. So obviously we rely on third parties to buy and sell paintings, which are kind of net to investors. Investors pay the price after we incur those transaction fees.
That's so interesting. I mean, that's significantly higher than transaction fees and management fees that would be associated with owning fixed income or equities, or even crypto.
Definitely true. Yeah, I mean, I think fees in crypto are higher, but the world that we live in, for better or for worse, is we have to go out and find individual assets, securitize them by filing them with the SEC, and then ultimately manage the asset and sell it at some point to generate returns for investors.
All right. So company was founded in 2017. What kind of returns have people seen?
So the average performance across all vehicles that we've done is between 14 and 15% per year net of fees.
Okay. So that's all right. So that's interesting. And I do think about the types of art. Have prices, as prices go up, obviously if you're invested in it, that's a benefit, but that means also your acquisition costs go up as well, right?
That's true. I mean, we tend to believe that our prices are correlated to the growth in the top 1% on a global basis. So you can buy a $10 million painting in New York and you can sell it in Hong Kong. So as the top 1% around the globe gets wealthier, we tend to think that our prices will go up. And that's what we've seen over the past few years. We've just seen prices in individual artist markets really skyrocket. I mean, the Banksy market specifically is probably the top performing market that we track, and that market alone is up over 100% over the past year and a half.
It's fascinating and great to get some time with you, and hopefully we can check in again down the road to see how things are going. Scott Lynn, he's the founder and CEO of Masterworks, on the phone in New York City. Securitization when it comes to art. Pretty cool stuff.
Who's your favorite artist?
I have a lot.
Yeah.
I respect the old masters,
yeah.
But I love some modern work as well.
Let's get to Joe Matthew for a check of what's happening in just a few minutes on Sound On. Hey, Joe.
Hey, you guys know all about the situation at the ports here. President talked about supply chains and prices today. We're actually going to have a conversation with the White House port envoy, John Porcari, coming up. One of the most important figures in our economy right now.
Yeah, and a great title. We were just marveling at that. Joe Matthew, have a great show, host of Sound On. Whew.
That's it.
Yeah.
At least for us.
Yeah, exactly. All right, have a safe evening. And Dave Wilson will always be thinking about you.